Well, I think we still don't even have enough priced in. So I think there's still more to come. But I think the issue now is the Fed is still laser focused on the level of inflation. They need to see that decelerate. And I think that's the gatekeeper to start to ease. They need to see that lower.
But in the absence of the Fed actually commencing or indicating that they're going to commence with a rate cutting cycle, how much more is the market going to price in? It feels as well that these rate cut expectations have sort of hovered between 140 and 160. Are we likely to price in more in the absence of the Fed actually signaling that they're ready to get going?
I think what you need is the data. So I think the data is going to lead the Fed. Right now, you're in a bit of this kumbaya moment where when you get bad data, the expectations for Fed easing increases, that supports equities and risk, takes rates lower. So you're in a bit where we don't have to feel all the pain from that. But I think that's what gets us there. You need the inflation data to be softer. That's your gatekeeper. Then you need the activity data. You really need the labor market to soften. That's what gets the pace to pick up.
Right. Well, you say you need the labor market to soften. The last couple of payroll prints have actually surprised to the upside. The most recent one, we had a surprise to the headline number, unemployment rate coming in lower. Some people are saying, labor participation rate. But ultimately, what we are seeing is perhaps a small softening of the labor market, but not to the lengths that would suggest that a recession is going to happen anytime soon. So the data actually doesn't validate these rate cut expectations at this point.
It doesn't yet, but I think it will get there.
Yeah.
I think the issue
but
here
where do you see it in the data, though? Where do you see the weakness?
So I think if you look in the labor market, even last week, at a headline number, it definitely seems strong. And you keep seeing these numbers close to 200,000. You see a low unemployment rate even in the Eurozone, record lows. So that's a consistent issue around the world. But if you dig through those numbers in payrolls last week, it's the non-cyclical areas. It's really government hiring, it's healthcare that's sustaining almost 100% of those job gains. Yeah. The rest of the economy is close to zero jobs. So there really is a two-track economy. It's not as healthy as it looks from the headline.
When do you think the data will start turning, though? When will these activity levels become a lot more apparent?
I think
weaker activity levels?
I think the inflation numbers over the next 3 or 4 months will keep coming in soft. They should be on the lower end. I think the labor market is still going to be a grind lower. And by the time you get to March to May, I think that's the part where you see manufacturing has stayed weak. The higher cost of living has fed through into businesses. That's pushed up their costs. The labor market starts to soften. And so it's really late spring where I think the activity data is going to be soft enough.